Hello traders, welcome to the video. In this video, I want to show you quick strategy that you can use to create your own strategy in the volatility index market. As you all know that I use indicators a lot for my analysis, but most of the trade I take is not only supported by indicators. So I also combine simple price action, which is support and resistance, to my analysis, which will give me more confidence in trading my strategy. So today I'll be showing you how you can easily do that on your chart, and also give you the settings to the indicators when I am trading my own personal strategy. So if you look carefully on my chart, this is the 1 hour time frame and this is volatility 5. So you should note that I do my analysis on 1 hour and 15 minutes time frame. Then I use the 5 minutes time frame for my entry, and it works very perfect. First thing we want to do in this time frame is we want to draw out our recent support and resistance zones. Let me use this line to mark them out. You can see our market touches at this point. You are looking for at least 2 touches. So once you have that, then that is a very nice zone. You see over here, 1, 2, 3. Here is another one. You have it react at this point, and react also at this another one at this point, where market has rejected many times. 1, 2, 3, 4. So once you have that marked, then you drop to your lower time frame. The reason why I mark this, and not this is because if you look at the recent price is in between this level. So before market comes to this point, after it touches this point, it can retest and then go to this point, or market can come here, touch this point, come to this point again. It can also break this point and come to this point. So after market reacts from this level, this is the next level. So when market reaches this level, then you look into this level and this level. So you deal with the current price action. So you trade what you see on chart. You don't assume or you don't think that market should do this. After that, then let's go to 30 minutes time frame. We can see that we don't actually have any clear level. It is still the same with what we marked. We have another zone here, but it will be more clearer on the 15 minutes time frame. That is why I do 1 hour 15 minutes. This is the level I'm talking about over here. So you can see. So before market comes to this level, it has to come to this level, and if you see reaction from this level, you target this level again and then this level. But if market break this level, you target this level. Hope you understand what I'm saying. So that is basically how you trade these support and resistance zones. So once you have that marked, let me combine our indicators now for the overbought and oversold level. First thing you do is to click on this indicator icon around this point. So click on this F to add indicators. My first indicator I will be adding is the fractals, so that I will know exact 20 points of the market. I will make it 2 pixel. Fractals are this small that you see over here. Then the next indicator is on this pen icon again. I'll be choosing my relative strength index, which I use for the levels. The period is 1, the apply is close, the style is 1 pixel, color is the color of your background. If your background is white, you select white. If it is black, you select black. The levels, click on this pen icon. That is what we need most. Add level, type 85 and 15, style 2 pixel, and select color of your choice. After that, click on save. This is it. So to select the next indicator, click on the F icon on indicators Windows 1. Moving average, click on that. Make your period to be 5, shift to be 0, method to be exponential, apply to close, style 3 pixel, and select color of your choice. After that, click on save. So next, click on this F icon. We want to see the fractals to align with the fractals in the relative strength index. Scroll down, fractals. So here we'll make it 3 pixel. After that, click on save. This is how your chart should look. So if you look carefully, you see that when market comes to this level, it rejects this point, then drops up to this level, reject this point, then continues to buy to the upside. So this is to show you that you can see me mark the oversold level or overbought level on market, but this is the principle behind the overbought and oversold level. You see it exactly at those points, drop into this point. You see how it retests this point to drop. This is the retest. If I add my 15 level, you will definitely see what I mean. Over here, what are we looking for? So first thing we do is to drop to a 5 minutes time frame, since that is our entry time frame. I'll be using this level for my quick example. So over here, what we are looking for is reversal patterns. So we use our reversal patterns for our entry. You don't just enter market because you see market touches this point and then you buy, or it enters the oversold level, although it also works. But combining this oversold level with reversal patterns, that is when you get more out of the market. So what are the reversal patterns? Let me quickly show you the two most powerful reversal patterns that I look for. So the first thing you look for is the double bottom or double top. So this is if you want to sell, and this is if you want to buy. And the second one I look for is head and shoulder patterns. So this is the first shoulder, this is the head, this is another shoulder, and it sells. Then reverse head and shoulder patterns. You can screenshot this so that you can save when you are backtesting this strategy. Shoulder, head, shoulder, and then it continues to an uptrend. So these two patterns is the one I look for. There are others, but this is the most important ones that I look for. You can also use candlesticks reversal patterns if you want. You can look for doji, you can look for engulfing candles, you can look for morning stars. So as I'm saying it, you can go on your Google and check for these patterns. That is how I trade this strategy. You can see over here, this is an engulfing candle doing reversal. Immediately you have reversal. This is another engulfing candle, this is another engulfing candle. Hope you understand what I'm saying. So engulfing candle works very perfect in the volatility index market. You can go on your chart. I don't really use candles, I use just patterns, change in market direction. Let's quickly talk about the patterns. I will go a bit back so that you will understand everything I am saying. Let's say we have market coming to this direction, and at the same time we can see this line coming into the 15 level, which is the oversold level. So we are expecting market to buy to the upside, and at the same time it is coming to a very particular level, so we can call it a zone. You can see this is a zone. So once you have that marked, then you want to see market touches that zone, then you want to look for a double bottom or a head and shoulder pattern. I have drew all those patterns. So you can see over here, market comes to create a first low, because if you look down here, this is where the fractals in this box come in play. One fractal at the same level, you will see another fractal. So this is confirming to you that this is the area where you have the reversal. So that is why I use fractals for the two areas. So once you have the first touch, then you see market goes up a bit. You see a rejection at this level, comes again, breaks the level. So this is confirming to you that market is likely to continue in an uptrend. Then you can see that this is a very good resistance and support level. Market breaks it, retest this level, break again, retest this level, create another low. So you can see at this point, first low, second low, so that is a double bottom. Once it breaks this resistance zone, so you will enter your buy immediately, and your target will be the next resistance zone that we mark from our higher time frame. So entry will be here, stop loss will be below this low, because you don't expect markets to come and take out this low, and then your target will be here, target, entry, and then your stop loss. Another example, so this is a reverse head and shoulder pattern. You can see how market comes, test this level, come again to enter into our zone that we've marked from the higher time frame, at the same time touching the 15 level in the indicator, which is confirming to us the market is likely to buy. So here we have market goes up, create a low, goes up a bit, create another low. Let me do that well so that you can easily see. You see how market break this zone, comes to this level, create a low, break this zone again, comes to this level and break this low. So this is the first shoulder, this is the head, breaks it again, rejects the first rejection around this point, comes to create another shoulder. Then once the two zones are broken to the upside, you will enter your buy. Stop loss will be below this low. So for the reverse head and shoulder pattern, your stop loss will be at the head, this up will be your entry, and then you target the next zone. You see how it hits the next zone. So over here again, this is a double top entry. We see how market breaks this zone at this point, into this point at this level into the 85 level. So the 85 level is the overbought level where market is likely to sell to the downside. So if you look carefully, we create a high, comes below to reject this point. So once you have that rejection, which is also at this point, then you will mark out that level. Market goes again to create another high. So that is a clear double top. So once you have it close below, enter your sell. Stop loss will be above this high, and then you target this low or the next swing that we mark from the higher time frame. You see that market is slow, but it finally hits it at this point. Then you will close your trade. So this is basically what I want to show you in this strategy. So I hope you understand this video. After this, I want you to go back on your chart, backtest this strategy, do exactly as what I have done, mark out the zones, and then put in the indicators. I know this is a lot of work. Trading is not an easy job. Most things you see online, you always think that small work, big money. It is also like that, but you should know that it deals with your mind, and then it requires you to be with your chart every single day. You can also trade this strategy using the 4-hour. If you think that the 5 minutes time frame is too fast for you, then you will use the 15 minutes time frame for your entry. So for the zoom level, this is the enamel zone. That is for this indicator. You zoom in 2 times 2. So this is the best zoom level for this strategy. You can see that once it touches this level, it buys. If you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.